Hey, this is Matt from InvestiQuant. Today is Tuesday, December 29th, 2020. Yesterday, we saw the markets gap up sizably, breaking away from a consolidation area that it has been trading in for a couple weeks here. And then after that gap up, it continued a little bit higher, but was mostly a quiet session, mostly sideways action in that quiet session as well. But we did end up closing higher, closing above the open and holding on to that sizable up gap. And with that sizable up gap, the markets ended up closing above the upper Bollinger band, which can often be a sign of an overbought market. So I figured what we would do is just study what has happened historically when you get a close above the upper Bollinger band, followed by some overnight activity like we're seeing, where you are continuing higher in the overnight session and opening above the prior day high. So let me go ahead and set that up here in Discover, and we will take a look. I'm going to look at all four instruments. The setup is going to be based upon getting long at the open of regular trading hours, which is 9:30 a.m. Eastern Time. The exit will be 4:15 p.m. Eastern Time, which is the close of regular trading hours. For the opening filters, I'm going to come into this opening area section and hit equals next to open above the prior day high. The market is currently pushing higher in this overnight session and holding above the prior day high. So this is additional strength after yesterday's strong move higher. Next, I'm going to go into the indicator section, and this is where I can add that close above the upper Bollinger band. And I can grab that from this overbought, oversold category. It's the second option. I'm just going to hit equals next to that. And then also, I'm going to put it above a 200-day simple moving average. Being above a 200-day simple moving average and above the upper Bollinger band, that'll put it above the 10-day as well here. So I'm not going to add that. And then lastly, I'm going to hit view results. And here we go. These are the results of going long when you open above the prior day high, following a close above the upper Bollinger band and also above a 200-day simple moving average. Historically, this pattern has happened 58 times in the S&P dating back to 2003. The NASDAQ has 67 samples, the Dow 71 samples, and the Russell 52 samples. And if we look at the win rates on these, they're just a touch weak on 3 out of the 4. NASDAQ's a bit more neutral, but the S&P coming in at 47%, so not a real strong reading as a weak reading, but it is just a little bit weak here. So 47% of those have closed above the opening print, with the NASDAQ 52%. The Dow a little bit weaker at 46%, and Russell the weakest at 44%. So none of these win rates are very strong, neither are they very weak. And if we take a look at the average win to average loss, they are very similar there in the S&P. The NASDAQ has a slightly larger average loss there. Average win is bigger in the Dow than the average loss, and the average loss is larger in the Russell than the average win. So overall, this pattern is pretty mixed. The win rates are a little bit weak, but I looked at several different things here before choosing this pattern to share with you guys this morning, and I saw a lot of mixed data. I didn't see much that was in pure agreement. So kind of indicative of what we were looking, or what I was looking at this morning before sharing this with you guys, is just kind of some mixed data this morning. So hopefully you found that helpful. Good luck today. We'll see you next time.